Okay, year over year, sales have completely collapsed in the Fraser Valley. So I'm going to be taking you through broadly what's happened in the market in February, because February was a bad month for real estate. I'm going to take you through Abbotsford, Surrey, Langley, as well as apartments, detached townhomes, and everything in between. Starting off with prices. What did prices do? Well, they ticked down $200 on an aggregate basis. So townhomes, condos, and detached in all areas of the Fraser Valley all combined to form this number, right? Now, if we look at inventory has been rising, which is typical for the spring. However, what's important is look at the sales. Like, I've heard other people say that sales are only down like 10% or 15% or something like that. I don't know which stats they're looking at, but as per the GVR Realtors stats, we're down 27% year over year. So 855 sales February 2025 versus 1174 this time last year. So, I mean, that is an absolutely pitiful tick up in sales. I mean, look at this. Look at every other January to February, right? You get a massive rise up. We got this pitiful little tick to the upside. And I mean, 855 sales this year. I mean, how far do you have to go back to see a February this bad? 1100 in 2024, 857 in 2023. So only slightly better in 2023. Obviously, those years would be better. 919 in 2019. So it's not, I guess, that bad comparatively. But I mean, if you compare it to what we'd consider to be a decent market, it's really bad. Like 2018, we had 1,300. 2017, we had 1,300. 2016, we had 2,300. 1,300 roughly in 2015. So, I mean, yeah, 2025 is looking like a pretty rough start to the year right now. Overall sales ratio of 12%. Now, let's go into specifically detached. Slight uptick, $2,000. Inventory obviously rose. Sales, again, most pitiful little tick up. We're down 33% year over year for detached, 303 this year versus 450 last year. New listings actually ticked down, which is interesting. So I guess a lot of the listings that we saw in January were a result of terminated listings and expired listings at the end of the year. And that is the same basically across the board. So typically you would see this rise throughout the spring, but we actually saw it tick down in February. So just a lot of people refreshing their listings from last year at the start of this year. Now let's go into apartments. Apartments, slight tick up in price, $1,000. Inventory continues to rise. We are at elevated levels of inventory for the condo market. New listings tick down. Sales down 33%, 281 this year versus 422 this time last year. And sales to actives is only at 13% currently. Townhomes. So townhomes actually went down, and townhomes have been the best performing asset class of the last couple of years here, but they actually went down in price. Total inventory again at slightly elevated levels. New listings tick down. Sales 255, but they're only down 8%. So townhomes are still, even though the price went down, are still going pretty strong. Sales to actives, you're at 20%. So you're still on the cusp of a seller's market. You're technically in a seller's market for townhomes right now in the Fraser Valley. So let's get into City of Surrey combined, which is the worst performing area. I mean, you're almost down at the bottom of 2023 pricing. You pretty well are. You're $3,000 off of that. Total inventory, 3,700 listings. You are probably right at average, maybe slightly above average for their 10-year average. New listings tick down. Sales down 26%, 409 versus 557 last year. Sales to actives at 11%. So you're in a buyer's market for City of Surrey combined. If we go into detached, you're up $2,000. Inventory, not so bad for the detached market. New listings down. Sales down 31%, 130 this year versus 193 last year. Sales to actives at 8%. So you're in a strong buyer's market for a Surrey detached home at the moment. Now, apartments, you're up ever so slightly, $3,000. Now, this is a lagging indicator. Keep that in mind. This lags 2 or 3 months behind, right? So prices could very well be going down right now. Typically, you'd probably want to see a bigger uptick in February, like every other spring. So not really a good leading indicator there to see prices only go up about 2%. Look at condos. Condos basically at all-time highs for inventory in Surrey. And this doesn't include all of the assignments, all of the inventory that's off market, all of the shadow inventory that developers are holding. This is just the stuff that's listed on the MLS, right? Sales down 36% for apartments, 126 this month versus 196 this time last year. Sales to actives, you are at about 11%, so you're in a buyer's market. Now we get into townhomes for the city of Surrey. Prices went down, but still well above the lows of January 2023, 851,000 versus, basically 800,000. So you're up 50 grand off the bottom there. Inventory pretty elevated for the townhome market. New listings tick down across the board. Sales, you're only down 12% in the townhome market. So again, townhome markets seem to be performing the best across the board. You're at 31% drop in sales for detached, 36% for condos, and only, roughly 12% for townhomes. Townhomes, again, in a balanced market, but pretty close to seller's market territory. Now, I want to quickly cover Whalley because this market's getting smashed right now. Somehow the price of apartments ticked up. I couldn't explain to you how this is possible. This could be from sales that happened in, I guess, November, December, when the market was a lot better, that are now registering because the HPI does lag a couple months behind. But I mean, this is either going to trade flat or go down, in my opinion, because you look at inventory, aside from this spike around 08, I mean, you're at all-time highs for the most part, or very close to it. Sales are down 51% for Whalley apartments. 47 this year versus 95 this time last year. Sales to actives ratio is at 8%. To be honest, I thought it was going to be lower than that because I look at the market right now, there's like 650 units on there, tons of assignments, tons of shadow inventory, and more product still getting launched as we're speaking right now. So this market is a mess. And I mean, if you look at Whalley overall, I mean, you're already below the December, January 2023 lows, trading at 509,000 from 637,000. But that's, again, aggregate pricing, detached townhome condos all combined. The condo market is really dragging this market down because there's just so much inventory. As I said before, Surrey Central is basically our Toronto at the moment, and Whalley is Surrey Central. Now into Langley, prices ticked up on an aggregate basis ever so slightly. Inventory is elevated. Sales are down only 22% across the board, 284 last year versus 222 this time. Sales to actives, you are in a balanced market. Now, as we get into detached actually went up about $10,000. Inventory, again, seems to be trading around normal levels for the 10-year average. Sales, however, again, down 30% versus this time last year. Sales to actives, you're at 12%, which is right on the cusp of balanced and buyer's market for a detached home in Langley. Now, as we get into apartments, again, price is ticking up, and I think these are just homes that were purchased in November, December, back when the market was a lot better, because February has not been good. But you look at the inventory for condos in Langley, again, you're trading at some pretty elevated levels at the moment. Sales down 25%, 78 versus 105 last year. And sales to actives, you're almost in a seller's market. Like, Langley has been a very resilient market, and that's because so much of Langley is end user product. Surrey Central is getting smashed right now because, like, I guaranteed like 65 to 70% of that market is just investor owned condo product. And they're trying to sell tenanted units. They're trying to sell units that are very small square footage, and there's a lot of inventory accumulating there. In Langley, you have a lot more end users in this market, and that's why it's performed so well, in my opinion, right? So we get into townhomes, slight uptick in price, $2,000. Inventory, again, pretty high now. Sales are up. So, man, I've been telling you guys about the Langley townhome market. This market is a juggernaut. Specifically, Langley townhomes, best performing market in the Fraser Valley. 65 this year versus 64 last year. Sales to actives, you're at 28% sell-through ratio. Like, that's a pretty good seller's market. Like, that's almost a hot seller's market, right? Some people might even call that a hot seller's market. Now, as we get into Abbotsford, prices ticked up $6,000. Inventory, again, looks normal. Sales down 23% on aggregate basis, 178 last year versus 137 this year. And then February sales ratio is 15%. That's a balanced market. So let's look at the detached now. Detached, again, prices went up about $12,000. Inventory, I would say that's actually trading even below the average, the 10-year average. Sales, however, down 30%. So sales for detached seem to be down about 30% across the board in the Fraser Valley, no matter which market you're looking at. Sales ratio, 11%. You're just on the cusp of a buyer's/balanced market. Apartments, Abbotsford apartments have been performing pretty well. You're up, what is that? About $4,000. Inventory, you're probably right at average. Sales, however, down 27%, 48 this year versus 66 last year. And you're almost at a seller's market for apartments in Abbotsford. There's not a lot of good condo product in Abbotsford. And that's why if you were to buy a new condo in Abbotsford, there's really only a couple buildings to choose from. Now, townhomes, again, actually townhomes went down slightly, a couple $100. Inventory, probably normal, I would say, right around averages. But sales, even for townhomes in Abbotsford, are only down 2.7%, 36 versus 37 last year, so pretty much flat. And then your sales to actives is 22%, but you're down 46% from last year, which was 40%, right? So you're still in a seller's market, but you're down almost half of what it was from last year. So overall, it depends what type of product you have right now. If you're a seller, if you have a townhome, a 3-bedroom townhome that's somewhat new with a good layout, you're looking pretty good right now. You know, you might even want to consider selling that and moving up to a detached home. That'd be a pretty good move at the moment. If you have your run-of-the-mill, like 1-bedroom condo, those are going to be a tough sell at the moment, especially if you're in Surrey Central. Even the 2-bedrooms, because a lot of the 2-bedrooms there are small square footages, 700 square feet, 750 square feet. And that's why I always recommend getting at least 800. And that way you're selling into that end user product 5, 6, 7 years from now. But if you have a condo in, say, Willoughby Heights, Langley, again, you're looking pretty good right now. Like, yeah, that market is definitely slower than what it was in the past. But again, because it's such an end user focused area, if you have a good floor plan, it's probably going to be a pretty easy sell for you. And then if you're in Abbotsford, again, a townhome is, basically in the same position that it was last year. And early 2024 was actually a good market. That was things were moving, homes were selling, realtors were selling homes, and it was a good market to be in. So if townhomes are exactly the same as what they were last year, you're looking pretty good as a seller. Now, if you're a buyer, right? I still like Surrey Central. I know there's more pain to come there. I know prices are going to keep dropping there, but again, on a value basis, you're getting, brand new concrete on higher floors at the same price as wood frame in Langley. And so long as you're buying a good floor plan that will appeal to an end user down the road, you should be safe. You're probably going to lose money in the short term. Prices are probably going to go down. But if you're buying it with a 5 to 7 year outlook, I feel like the value there is for condos is probably your best value purchase right now in the current circumstances. But hey, I might be wrong about that because there's 44,000 units in the pipeline for Surrey Central. But I mean, the way things look now, it looks like almost none of those are actually going to get launched and built. And I know a lot of the product that is launched currently in Surrey Central is having trouble selling. So although Surrey wants to be, heavy, very focused on density, and they're approving all these projects, a lot of them, most of them, the large majority of them are not going to get launched and complete. And, 2028 onwards, you're probably going to have a lot less competing supply in that market, depending on, how much demand comes back into the market in the next couple of years. If you enjoyed this update, please do subscribe, like the video. Appreciate you guys. If you want to chat with me about buying or selling in the Fraser Valley, there's a link down in my description. You can book into my calendar and chat with me direct. Otherwise, thank you for being here. I'm that Agent Kelly, and I'm making moves to move you. Peace.